going on, everybody? Welcome back to my channel. Welcome back to another Sunday sector recap. So without further ado, let's get right into it. As far as the week ahead goes, there is not much going on from an economic data perspective. We have existing home sales and housing starts and building permits, but nothing really market moving, really that I will be paying much attention to at all. Moving on into the S&P 500, we printed this weekly candle. Now let me move some of these lines out of here. That is, looks short-term bullish to me. When you wick down as far as we did, $10 down from the September lows and we get bought back up above, it leads me to believe we slowly grind higher. So that's what I'll be watching. As far as levels above, I would just be watching. I tend to think that we do something like this, some sort of grind like this. That could maybe be a bottom, but something like this, either wedge or more, maybe it's going to be more range like that. But I tend to see some movement like this. This is a 4-hour chart. I tend to see some movement like this back and forth for at least a week, if not a couple weeks. And then I think the market will make a decision from there. So that's how I am playing it. I'm not expecting a huge move up or really a huge move down for right now. I think we're kind of back chopping a little bit. And we did end up going lower last week. We talked about this candle. We said if it breaks below, if you remember, I said if it breaks below this candle, this level, the low, which was the 359 level, we could get down. And I even said we could wick down hard and get bought back up. And that's exactly what we did here. I had caught the gap down. I was short Apple, or I had puts for Apple, so I caught the move down, as well as the move back up. So I had a good week. But let's move into sectors. So some of these names, some of these sectors really, still are pretty bearish. We're still getting beat up. XLE is not one of them. XLE, although a lower volume week, it still hung in there and formed somewhat of a bottom wick down kind of right at this downtrend line. If you look at it, let's move on to healthcare. A lot of people think that healthcare inflation is going to roll over. I really have no idea. I have no insights on anything to do with that, really. But this looks choppy. This doesn't look really like anything I want to trade. It could be a complex head and shoulders. That could be a head, shoulder, shoulder. This chart there's really nothing there for me to want to participate. XLF, we had some earnings come out. For the banks, I haven't had a chance to look at them quite yet, so I'm not going to comment on them. But XLF did get rejected along with the market today, so still expecting some consolidation on that as well. Moving on to consumer staples. Actually, one of the harder hitting names today. Got beat up more than the rest, and so something to watch, but the volume was quite light. So if we move on to, let's pull up a weekly chart here. This is the software ETF. It did end up selling down and on pretty nice volume, so that's interesting to me. I think that people are starting to buy software down here personally. This is what this looks like to me. Looks like people are starting to nibble. Move on to materials. Materials is just consolidating here. Although as long as the Fed keeps jacking up rates, I think they have more room down to the downside. Industrials still holding strong on this level, kind of this prior high. So nothing really cooking there. It's just consolidating some. XLC, really nice continuation move down from the bear flag break. looked like it was going to double bottom and just a hard reject, and now it's down. Let's see. This is as of right now, this is a 17% move in just under 2 months. Real estate continuing to get beat up, obviously, right? The Fed is literally pushing it down. And so this is an interesting spot here for real estate. This is 1, 2, 3, 4, 5 straight weeks of red candles, or you could say 3, 5, 6, 7, 8 out of the 9. The past 9 weeks have been red. That's quite interesting. Moving on to tech, XLK, weekly chart. This one also got nibbled on. It got bid up. It makes me, similar to kind of this area. It's kind of what I'm expecting on the markets. So back and forth for, I think, probably 2 weeks, a couple weeks. Moving on to utilities, selling off hard, back below this prior high. This was the COVID high, and they're back below it, so right before the COVID crash. So it has retraced all of its gains. Semis still a tiny bit down to go, right? Although it does, if you look at the volume, it looks like they're starting to buy. They're definitely, the big money is starting to load some of these names. XLY is still just sitting on this. I expect this to break down, and wick can get back down under here, under its high, this prior high right here, 130. Tesla's been leading this to the downside. So last thing we'll look at here is Tesla, just because what a move this has been. We said this could be a head and shoulders, and it is somewhat playing out as a head and shoulders. And we'll see where it goes from here, but I still think this 150-ish zone probably, and I don't think it stays there long, mind you. Personally, I think it probably gets bought back up pretty quick. I think you're already starting to see people nibbling and buying down here, especially once you get below 200, right? That's a key psych level. Once it gets below that, money's going to start pouring into this. Okay. So thanks guys for watching this video. As always, thanks for viewing, subscribing. Make sure you do me a favor and like the video, and I'll be back with more videos.